As we move through Jan 2026, the world is watching a dangerous standoff. Tensions between US and Iran have hit a breaking point. We are seeing the new maximum pressure campaign from the Trump administration and massive internal unrest within Iran. This isn't just a political story, it's a massive economic event. There are three major impacts you need to know. First is the oil fact. The Strait of Hormuz is the world's most important energy artery, and right now it's high risk zone. You've already seen Brent crude spike towards $70 a barrel. For India, this is a massive problem. Since we import 80% of our oil, every time crude prices jump, it acts like a tax on our entire economy. It drives up transport costs, makes groceries more expensive, and pushes our inflation rate higher. If this conflict escalates into a blockade, analysts warn that we will see prices moving into triple digits. It could be a big problem. Second is the trade war. President Trump recently announced a 25% blanket tariff on any country or company doing business with Iran. While India's direct trade with Iran is relatively small, mostly basmati rice and tea, but the stakes are much higher. US is our largest trading partner. Indian exporters now face a loyalty test to continue selling to Iran and risk losing access to massive US market. This is already causing panic in the agriculture sector, specifically for rice exporters who count Iran as a top three buyer. Third, let's talk about the hidden costs. Because the Persian Gulf is now a potential war zone, shipping insurance premiums have skyrocketed. Freight rates are rising as ships take longer, safer routes to avoid the conflict. This adds a layer of cost to every imported phone, machine part, or chemical coming to India. So, how should you read the Indian markets right now? It's a tale of two halves. The winners, upstream oil companies like ONGC, are seeing their stocks rally because higher crude prices boost their revenue. Gold has also hit a record high as investors flee to safe assets. The losers, sectors like aviation, paints, and tires, are struggling because their raw material costs are tied directly to oil. Meanwhile, the rupee is under heavy pressure, currently trading near 92 against the dollar. Expect this volatility to continue until we see a diplomatic de-escalation. If you are an investor, now is the time to prioritize defensive sectors and keep a close eye on the 2026 Union budget for energy women. Quick update. We are going to cover a deep dive on how US markets can crash in 2026 and its impact on your portfolio. So stay tuned and thank you for your time and energy.